Today, I want to talk about some common objections for a retirement annuity. So when I'm meeting with prospects and talking about guaranteed lifetime income benefits, money that you cannot outlive, I'll see a lot of stress and tension being released from my prospect. But when I mention that those guaranteed lifetime income benefits come from a retirement annuity, all of a sudden the walls start coming up and red flags start shooting out from every direction possible. So what I want to do in this video is address those objections because they're totally relatable, but I want to show you the other side of the objection. By the end of this video, I'll give you the facts so that you can make an informed decision about whether a retirement annuity is the right fit for your retirement portfolio. Hi, my name is Darlene Hartman. I'm a CPA and founder of D. Hartman Consulting, LLC. For the best retirement annuity advice, subscribe to my YouTube channel and hit the notification bell so that you can receive notices anytime I post a new video. So one of the biggest objections I hear is that the interest rates are too low. So I've mentioned in many of my videos that you're exactly correct. We are in a historically low interest rate environment with no end in sight. We're not sure when those interest rates are going to start to go back up. Again, I don't have a crystal ball, so I can't predict that. But I want you to remember what the value of a retirement annuity is. It's not the interest rate. It's those invaluable mortality credits. Go up the age scale past the age of 70 and notice that your guaranteed income paycheck consists more so of those mortality credits than it does of interest and principal combined. So be aware because the cost of waiting for those interest rates to go up can be quite expensive. So the benefits of guaranteed lifetime income are greater the sooner you start. So go back to my video, The Sweet Spots for a SPIA and a DIA, where I talk about the advantages of cooking your retirement annuity several years before you start receiving those guaranteed income paychecks. Another common objection I hear is that you don't want to lock up your money. So you're right, you are locking up your money. If you remember correctly from my previous videos about a SPIA, a DIA, and a QLAC, it is a rigid contract. So you have to know that this is what you want for your retirement at the time you sign that annuity contract. So there is a lack of liquidity, but that is in the short term. So you're sacrificing short-term illiquidity for long-term liquidity, money that you cannot outlive. So by having a retirement annuity, you're ensuring your retirement, your income in retirement over an indefinite period of your retirement, which is what I referred to before as longevity risk. Many of my prospects talk about the fact that the retirement annuity is not FDIC insured, and they are exactly correct. But if you go to the FDIC's website, you'll notice that there's not enough FDIC insurance to cover one large bank, much less the entire industry. But with respect to insurance companies, there are agencies out there that rate these insurance companies based on their credibility. And when you're looking at a retirement annuity, you want to be sure to find one of those financially strong insurance companies. Of note, not one single person has lost even a penny from a retirement annuity to date. Leave me a comment in the section below and let me know if any of these objections have caused you to pass on a retirement annuity. Also, if you're enjoying this video, be sure to give me a thumbs up, subscribe to my YouTube channel, and hit the notification bell so that you can receive notices anytime I post a new video. As I mentioned earlier in this video, there seems to be this stigmatism over the word annuity, and many people think annuities are bad. But there are no bad retirement annuities, but there may be annuities that are not right for your specific needs and your risk tolerance, which risk tolerance would be your views about the volatility of the market. So research shows that we all need to optimize income in retirement over that indefinite period in retirement. And mortality credits can bring success and happiness in our retirement. So what if the interest rates start to rise? What happens? Because I've already mentioned a retirement annuity is a rigid contract, and that once you get in it, it's really hard to get out of it, especially without a penalty. Well, I do want you to know that some retirement annuities offer an enhancement option. So if the interest rates go up 2% in 5 years, you'll actually receive 20% more in guaranteed income benefits over your lifetime. Now, what about inflation? So I mentioned that the QLAC has an automatic provision in it that allows for increases due to increases in the cost of living. But with respect to a SPIA and a DIA, you actually have to purchase an inflation rider, which costs you an additional fee in order to cover the cost of inflation. But what I want you to know is that only 4% of those people who have retirement annuities purchase that inflation rider, because the payments start off significantly lower at the beginning of the contract and then continue to grow over time to cover that cost of inflation. So keep in mind that you can also ladder your retirement annuities to ensure that you receive even more money as you get older in retirement to cover that cost of inflation. If you're wanting to ensure your income and therefore your retirement, and you feel like you can't live without those invaluable mortality credits in your retirement portfolio, be sure to click the link below to apply to become my client. Also, if you're enjoying this video, be sure to subscribe to my channel, hit the notification bell so that you can receive notices anytime I post a new video. Share with your family and friends. Thank you for watching. Let's get the conversation started on how you can live your best retirement while not outliving your money.